So you're going to list Senvion?
Yeah, that's our plan.
So talk me through the plan of listing Senvion, how much you hope to realize in terms of a stake sale in Senvion?
So our plan is to consolidate the business so that we can make Senvion more competitive in a global front. Currently, Senvion is more concentrated on a European market base. So we are expanding his geography this financial year by adding the more markets. So consolidation is the business of the group is most important, step one. Step two, raise the debt on a Senvion side and reduce the rupee debt on a SUZLON side. The step number three, taking to the Senvion on a capital market, raising the equity in the current financial year and reduce the rupee debt. So plan is there, end of the year, we want to target to reduce our rupee debt completely.
So how much do you intend to extinguish using equity? What is your goal or target as of now?
Equity as per the LSE regulation is 25%.
And your expected valuation for Senvion is 2 billion
euros. 2 billion is a minimum.
2 billion euros.
2 billion euros is there. So the 25%, 500 million euros we can able to raise.
What is the timeline for when you expect to list Senvion?
This is the steps we have to follow. One is the consolidations, then second is the debt raising, and the third is to the capital market. So it takes at least the 6 to 9 months. The target is the current financial year.
What do you mean by adding markets? So are you going to transfer some businesses from SUZLON to Senvion and through that also realize some money? Is that how you're looking at it?
There is two ways there because the Senvion is currently it's concentrating some of the market. As you see, the last 3 years we have transferred the business of the Australia and Canada and some of the European market.
So these were businesses you transferred from SUZLON to Senvion?
Yeah, not transfer directly we can say. The Senvion has started the business based on the SUZLON platform. Okay. So that they have started and we have reduced because of the liquidity constraint. We have concentrated more in Indian market and they can concentrate on a developed economy market. Okay. So now the plan is there they should start entering into emerging market where there is a established platform of the SUZLON is there like in Brazil and South Africa market. Okay. So they can start of that, increase the volume on those market. Okay. So that's become a more global organization and the operations of the group, its consolidation on a technology front, on a supply chain front, on a market front.
Okay. So how do you avoid cannibalization of some sort?
No, it's because
I mean, will the gains of growth in these markets come to SUZLON? Will it come to Senvion and to SUZLON through Senvion?
No, both will come because the 2 megawatt segment is SUZLON is there.
Right, and the larger ones is
3
Senvion.
3 megawatt product segment is Senvion is there, where market need both the product portfolio.
Okay.
So we'll share that the market in that category. So we'll increase the collective market shares very strongly. Okay. But the current priority for SUZLON is the high concentration on Indian markets only, because limited working capitals what we have, we want to utilize in a smaller cycles of the turnaround of the business, because Indian market is 9-month cycle time is there.
How much debt do you intend to raise on Senvion's books currently to be able to use that debt, transfer it here to the parent company and pay back some of the parent company's
loans? It's not decided yet the size, because it will be the bankers working on that based on the current year EBITDA. Normally 2.5 times of the debt we can able to raise that. So that's the structure currently the bank is working. So that plan will be
roughly what numbers are you working with in terms of the debt, the amount of debt you would like to raise?
No, approximately it's possible 400 to 500 million euros.
400 to 500 million euros. Yeah. So that's the debt you'll raise on the Senvion books in order to pay back some of the more expensive rupee debt here in SUZLON. And there is no regulatory bar in you being able to do this.
It's subject
nor are you likely to see any lender backlash.
Subject to both the bankers' agreement. That is the current discussions.
Both the bankers as in Indian bankers and the
Indian banks and foreign bankers should be on board on that.
Why should the foreign bankers agree to do this for the Indian bankers?
But same time it's enhancing the business also, and structuring is going very well. If you see the last March when we have done the bond line facility which we have, it is called non-fund facilities.
Yes.
The earlier group of banks was the most of the regional banks.
Yeah, I know.
Now
you've expanded your portfolio of
global
lenders.
Banks. Now those global banks understand the capital structure value for the group and value for the Senvions.
So this debt raising on the Senvion's books in this financial year, the listing of Senvion in this, have you started paperwork with the LSE already in terms of filings, etc.?
Not possible yet, because it's a stepwise is required.
Okay.
So this financial year, both the transactions will be
through both you expect to release about €1 billion.
Yes.
And you will use that to extinguish all India debt currently that you have, which is
rupee
roughly
debt only.
Rupee debt. I get it, because the FCCB debt has been restructured.
No,
anyways,
FCCB anyway restructured, and the FCCB holder has a good opportunity to convert into equity.
So working, since you work these numbers out, and I'm not so quick at math at this point, your current interest burden on a quarterly basis is somewhere in the region of 537 crores. This was as per the last quarter.
It's an average.
So how much will it come down by the end of this year, fourth quarter, which is the quarter that you expect to post a profit?
It's not quarter, but annual basis point of view, it is nearly 1,000 crores interest reduction. So quarterly, it's 250 crores.
So you intend to come down to how much in fourth quarter? 250 crores.
250 crore will reduce.
250 crores will reduce.
Reduction
so you'll be
will
down to about 250, another 250 crores in your interest payment.
So it will reduce. So that will help us. One side, I will improve the EBITDA side, improve the EBIT side, and reduce the interest side, so I can able to go to the PAT positive.
So I want to talk about growth, but before that, what is the timeline on your roughly 1,000 crores of asset sales still pending as part of your CDR?
That is ongoing.
So what have you identified what exactly you're selling, and when do you intend to do these transactions?
That is ongoing. As you know, we have sold out the Edison, our asset in the US market.
Yeah.
And we have bring a $90 million, and China
and you've done
also
the China stake sale,
the 40 million, so that has also come.
So what is left to sell now? What are you intending to sell?
Manufacturing capacity in India, which is a good real estate value now, it's there, and which we also don't require, because it's for the earlier plan for the smaller turbine. Now we are going a bigger turbine, and we are putting some new capacity, so that the plant will be removed, and some of the component manufacturing facilities we have, that also we have to remove. So this current financial year, our plan to reduce another 1,000 crore asset sales, so that will also give the benefit to the either operations requirement or for the debt reduction.